And we want you to take a look at this graph showing inflation under President Biden. Now, when he took office in January 2021, inflation was at 1.4%. It peaked at 9.1% in June of 2022. And now, just last month, it's back to 3.4%. So what does that all mean for our economy? Let's bring in Bankrate analyst Sarah Foster. All right, Sarah, altogether, prices are up nearly 20% since Biden took office. So as we take a look at this, on the whole, do you see prices coming down anytime soon? We need some good news.
Well, we do have some good news. The main story, though, is that it will require some patience and time. A survey of economists that we run quarterly shows that economists are actually slightly more hopeful that we might get to that 2% inflation threshold. That's often considered really the Goldilocks level of inflation, not too hot, not too cold, maybe by the end of this year, but if not, by some point in 2025. But we do understand the pain that this high inflation brings. And according to our analysis, that about 20.8% increase in prices since the beginning of the pandemic roughly requires $208 extra that someone would typically spend on $1,000 for the same goods and services.
Right. You know, the Dow closing past 40,000 for the first time ever yesterday, casting a positive light on the U.S. economy. So there's that. The president taking credit for that on Thursday when the Dow hit a record high, saying, quote, "This is great news for Americans' retirement accounts and another sign of confidence in America's economy." So when we take a step back, do you see this as a good sign the U.S.'s economy is getting back on track?
I think what can be worth celebrating is the fact that we have seen inflation fall from that 40-year high of 9.1% to 3.4% today with a minimal impact in the job market. Of course, we do know that Americans' wages haven't kept up with inflation. We did a survey of workers at Bankrate, and we found that more than half of Americans who received a raise say that their pay didn't keep up with the increases in the overall cost of living. So we do understand that pain. But what I think this really helps Americans is that this strong job market at least allows them to maybe eat some of those higher costs. Of course, we know that this job market is really one of the reasons why we haven't seen that long forecast recession. You know, I've been tracking the economy and recession odds really since the Fed began raising interest rates. And I saw really this overall consensus, maybe the most alignment I've ever seen among economists predicting that a recession was on the table as the Fed raised interest rates to cool inflation.
Wow,
of course, that's yet to come to fruition.
That is so interesting. And credit card debt, that is huge right now. So many people are falling behind on their credit card debt. We want to show you this, too. Americans now owe $1.12 trillion. That's according to the New York Fed. So as we take a look at that, and I know a lot of people watching right now are trying to figure out how to manage this, what can be done should the government interject to cap credit card interest rates?
Well, I think what's really important is while economists might look at credit card debt and say that the reason why it's increased might not be so economically startling is because it's coming from this pandemic era historic low, really rebounding and renormalizing to levels that it was before the pandemic. But I think from this personal finance perspective, this is really why we are so concerned at Bankrate about the impact of inflation. We know that Americans really only have two choices to eat these higher prices. They can work on their income, boosting it, or they can cut back on expenses. We know that they really haven't had that opportunity since inflation has been impacting those everyday essentials that they can't live without. We had the chance to actually ask Chicago Fed President Austin Goolsbee about how he's looking at credit card delinquency rates. And the fact that it has increased despite this low unemployment rate is something that is worth watching. Of course, we want to remind Americans that if you are one of those people struggling with credit card debt, of course, you're not alone, but that because we haven't faced a recession yet, there is still an opportunity to get rid of that debt quickly with 0% balance transfer cards lasting between 18 to 21 months in the data that we track at Bankrate.
Yeah, we need a financial support group for many people who have this type of problem. I know that, you know, it's going on a financial diet for a lot of people, trying to figure out where to pull from, where to pull back. Sarah Foster, we always appreciate your insight. Thank you so much for your time today. Really appreciate it.
Thanks for having me.
All right, thank you.
Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.